Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Thursday, July 8th. Mike Boutros on the horn with you. Good morning to you, Jay, Ted, everyone in the room. We've got a lot going on. The list is long today. I've got some really interesting price action. VIX is popping up finally to some decent levels here. On the menu, we'll go over DXY, Euro, Sterling, Kiwi, Aussie, Gold, Dollar Yen, Crude. We'll hit the 10-year real quick. Dollar CAD, Aussie Yen, SPX, Bitcoin, and oil. So it's a full list today. I'm going to try to get through this as timely as I can. As always, feel free to throw out any questions or trade setups you guys want to review. So that said, let's jump right in. It's an interesting start to the day, okay? You're seeing some divergences happening across the US dollar majors, more specifically the European bloc, specifically Euro and Swissy, continuing to get almost like a haven status. So as you're seeing risk sentiment turn over, you're actually seeing Euro catch a bid, the Swiss franc catch a bid, the yen catch a bid versus the dollar, whereas the commodity block, dollar CAD, Aussie, Kiwi, all just completely falling apart against the dollar. So some split decision here puts the DXY in a very interesting standpoint. So you guys have seen all this chart before. The weekly chart for the DXY, remember the same resistance region we've been talking about for the fourth consecutive week, and that's 92.28 to 92.46. We still need a weekly close above this region to validate the breakout. You've got downslope resistance. You got a basic 236 of the decline off last year's high. You've got that 2018 yearly open. Okay, so into the close of the week, we're looking for reaction here. We need to close above to validate the breakout. Again, momentum, it hasn't broken 60 at all since last year. Again, with market change in behavior, if we get a close above this region and a pop through 60 on the weekly chart, intraday, or I should say daily first, continuing to get that third ongoing divergent print. And this is something I was warning about last night. You know, one touch, two, third touch of resistance, third divergence on the daily chart certainly does suggest or highlight the risk for some near-term weakness here. Now, again, as I noted in the piece yesterday, we broke lateral resistance, but that slope continued to hold. And these are the trades that will tend to get a little bit hairy, specifically into the open of the month, specifically into the open of the quarter. So I'm much more reserved. Now, that doesn't mean that we don't have good clear-cut plays on the dollar majors, but specifically on the index here, with that divergent signal that we're seeing, you want to use a little caution. So we're at uptrend resistance. Any way you slice it in the DXY, here's what the chart looks like now. Here's what it looks like, or it looked like last night. So 3 reference points here, not really strong divergence, but you are getting divergence with that last spike high not registering a new high in the oscillator. Here we are, still holding, right? For all intents and purposes, the weekly opening range remains intact. We're slap in the middle of the weekly range, just below trend resistance. Weekly open support 92.24. If we break the objective weekly, opening range lows, inherently you'd look for a larger setback. The trade remains constructive while above the September low, that's 91.75. But near term, I'm a little concerned. I am a little concerned that the index could set back a little bit. If we break, and this is the thing that we always talk about, a breach of uptrend resistance, we should make short order and a quick spike into that 93.23, 93.40 zone. So the levels are clear cut, but we're at uptrend resistance. So definitely something to keep in mind here on the DXY as we head into the close of the week. No major economic data of note, okay? And heading to the start of next week, we get core inflation data, so things start to come a little bit more pertinent. But for the index, certainly testing uptrend resistance. So where does that leave the euro? So if we go back to the one or the currency that's been strengthening, the euro is really what has held its own over the last couple of days. So I'm going to take you back to the euro first here, and let's go to the weekly chart. So as far as the euro is concerned, we talked about the possibility of this break here. We failed there last week. Again, the 52-week moving average offering some resistance. And here's what we've been doing. The weekly chart doesn't have much here to focus on. The low we closed for the year, 117.60, is sort of a pivot I would like to get below. But certainly at this point, the weekly chart, more to be desired, right? More to be desired. Here's what it is on euro. By the way, I'm flat. I don't have anything on positioning here per se, but remember last week we were in that short for quite some time. Here was the rebound. Remember I told you this week we were looking for failure either at that slope or at the upper parallel. There was a perfect entry there. Again, dropped into support out. Here's the break and starting to get a little messy here. So the formation, the pitchfork, is pretty clean, but the momentum is waning. So here's that a little bit unorthodox low, high, low, or I guess it's a high, low, low, high, low, or I guess it's a low, high, high. But in any event, you see the slope has been acting pretty well. Weekly opening range kind of failed. We're still in the weekly opening range. I'm neutral here on euro. I think there's tons of other opportunities to get involved in. Pistol to my head, if euro rebounds, I'd be more interested in fading a larger recovery. But if you look at this, you know, it's just, it's not the most convincing. It's not the most, conviction isn't there. Conviction isn't there. Now, weekly open resistance is just above the monthly open resistance. That's 1856, 1865. You know, if we see a clear-cut hold there, the resumptive move still looks for 1730 and 17. But just not getting that downside thrust. And interestingly enough, euro has been offered, at least over the last couple of days here, or at least day, seems to be sort of a risk-off haven, interestingly enough. So DXY, euro, both telling the tale of a cautionary move here in the dollar. Again, the other majors are going to cross over today seem much more clear. Euro, I want to take a little bit of a side seat here into the close of the week. Any questions on euro dollar? All right, let's get into stuff a little bit more interesting. So here's sterling. Obviously, the swing trade didn't work out so well, but sterling levels are actually still pretty clean. I gave you guys an update on this earlier in the week. Here's what we looked at as we were coming off of critical support. So the game plan was to look for resistance off of one of these two levels if we broke the median line. We went into the median line, attempted to break, that failed, pulled back right into that 37.65 level. That held for just a bit until we broke last night. We're back at the lows. So for sterling, here's what the weekly chart looks like first. I just want to highlight this major critical support. I love the idea of the swing trade that Jamie is getting involved in just because of where we are in support. And I told you guys this on Tuesday as well. If there's going to be a dollar sell-off pair, this was an interest of interest to us because of the confluence of technical indicators are all right there. You got the 786. Well, actually, just forget that. You got slope support, down slope support, longer term median line support. They're all still right here, more or less. So while the near-term charts look pretty bearish, the weekly, more to be desired. The real test would be to break below 36.75. If we break below that, again, that's the Brexit gap, but we've been major pivots along that plane. If we break below that, that's also going to invalidate the April lows. You'd look for the resumptive move. But pretty important support from the weekly standpoint. So what do we do on this from the daily? Well, sterling looks like this, even on the lateral level, okay? There's an 88.6 of the advance off the yearly low. Here's the April low day reversal close that offered some support on the initial drop here early in the month. Here it is, support again, 137.34/42. We're at support. Again, I'll note the ongoing divergence, price action of the lower low. Today, watch the close. If we close a lower low than we did on the first, that would be a third divergence reference point. So certainly some red flags here as sterling continues to settle right into support at the monthly opening range lows. Here's what it looks like on the intraday charts. So all things held constant, this did look like a break of the weekly opening range lows. Failure, again, that was the 618 of the rebound. Scratch that at this point because we've broken the lows. And we've just failed at the high We bobbled right along that 37.84 level right there. There's the break. We're back at support. Looking for inflection here. Okay. If this holds today and the dollar losses start to amount for sterling, it's just a trade off the lows. Your stop is against the lows. You still need a break of the weekly range highs to at least validate a recovery. All things held constant below this, the problem becomes you're still looking at two key lateral levels. Again, the Brexit gap at 36.75 and the objective yearly open. Not Mike Boutros' opinion, not Jamie's opinion, fact, right? 36.46. So again, I don't really know how to get involved here, guys. If you're not already short, there's nothing really to do. If you're looking for new positioning, again, look for inflection off this region. If we start to mount and we get an assertive move back above 37.84, stop against that low, looking to play the recovery. At the end of the day, we're at support any way you slice it. Any questions on sterling? It's number 3. All right, more of the actual trades that we've been involved in. So here is Kiwi. Well, I guess I gave you guys a more recent Kiwi update. Nope, that was still the same update. So here's Kiwi. We were opening the market on Sunday, or I guess this was on Monday after the holiday, looking at this 618 retracement. It was 70.39, 70.40 right about. Pitchfork resistance, bearish invalidation, really key level there at the 2018 open. We broke that pitchfork, ran into this resistance zone, failure, and then turned lower. So we actually got a really decent positioning. Okay, we're testing the lows now. Again, let me take a step back here and just take you from the top down on Kiwi. It's been a pretty radical trade. Here's Kiwi dollar on the weekly charts. Key support, we're still testing that level now, 69.40 to 69.69. Big zone, 52-week moving average, former swing highs from 2019, former late 2018 swing highs, basic trendline support. It's all lined up right here. It's also going to now define the yearly opening range lows. Again, we made a false break there with a close just below, quick rebound, puts more emphasis on a close below the 2019 high to really validate the breakdown. So we've liked the short in Kiwi, but again, we need inflection off this support range. It's absolutely critical as we test this support range to get some sort of inflection off that mark. Watch the weekly close. Here's what it looks like on the daily chart. So it's unbelievable. You can't make this stuff up. I always told you guys to mind the closes, right? Mind the daily close. Here, as the market was ripping, and I was telling you guys, watch the close. This might be a massive breakout. Could be a massive breakout, right? We broke down trend resistance. We broke a 38.2, major pivot at that 2018 open. We closed that day lower on the session. That's your classic exhaustion trade. If you bring it into a line chart, forget the intraday. Look at that. You can't make this stuff up, guys. This is why we have to always be mindful. Intraday price action can be very wicked. And while it's great for us as intraday traders, when you head into the open of the week, head into the open of the month, head into the open of the quarter, you've just come off of an extended holiday weekend, you get these moves. You get these moves that are complete fake outs. Okay, we're still holding this pitchfork formation. We never closed above. We're back at support, 69.33, 69.41. Here's what it looks like on the intraday. Okay, and here's exactly how it played out. So the 618, again, if that drop, which has been omitted at this point, broke, ran into this zone, failure. We closed below that pitchfork on the 6th. Again, weekly opening range break, we're looking for it. We got that yesterday. Here's the tumble into key support. If you guys recall, 69.33, 69.41 was actually the limit, the last limit that we had for this drop, which never actually got there. We're there now. Key support, key support. A break below this region? Yeah, if we break below this region, the next level down is going to be, I'd look at the median line first near 68.50, but the next real gung-ho figure for me is 67.95, okay? So you have a nice pivot high there from September of last year, the break and the origin of the breakout into November of last year. It's also the 100% extension of the decline off of the highs. So if you take 1, 2, 3, even if this whole drop is correctionary, 2 equal legs opens up 67.95. So that's the risk, in my humble opinion. If we break below this key level, all things held constant, we are at support. We're at support. Now, speaking of at support, nothing exemplifies this, in my humble opinion, more so than Aussie dollar. And this is what I'm watching like a hawk into the close of the week. Look, Aussie is at a major critical support zone. I put this in my quarterly forecasts for daily FX last month. The big zone is 74.15 into 74.17, excuse me, 73.85 into 74.17. Got a whole bunch of stuff there, okay? You got the low week close from May of 2017, nice pivot in 2018, high, breakout, now support. You got a 236 retracement of the entire advance from last year's low, 74.17. You got the 100% extension from the decline off of this year's high. 1, 2, 3, 2 equal legs gives you 74.15. And in case that wasn't enough, the pitchfork we've been following ever since the break, the lower parallel is right there as well. So Aussie is at a major inflection range. We want to see some sort of acceleration here. If it breaks, again, the likelihood for an accelerated drop is there. While you're above, the shorts start to become at risk. So if you're holding shorting positioning, this is where you want to start lighting the load, reduce your stops to break even or better or in the money. We're looking for inflection here. Here's Aussie on the daily charts. Okay. Again, there's that 100% extension from the highs, 74.15. A 618 retracement of the advance off the low we made in November of last year. So this last stretch gives you 73.78. So a nice little support zone here of where we need to see some sort of major inflection for Aussie. Intraday, same picture. Same picture. Here's a 240. And here's how it looked into the start of the week. There we were, popped higher, failure, perfect play, move lower. We're now at that 100% extension. Next major key support, just lower, 73.75, 73.78, excuse me, 73.71. Okay, so those are our two big commodity hitters. Last thing I wanted to do from that same report, number 6, here is gold. It doesn't look like Iman made it to the room today. I know she's been following this one. The breakout manifested, played out pretty well. Okay, so into the start of the week, we talked about last week's breakout of the descending pitchfork that we've been following off the highs. Really nice break, kind of faltered there near the 2012 high for a while. That broke. The last level that we talked about was 1814, 1815, that 38.2. You got the median line up there. Well, gold is checking that right now. Okay, still the same levels, no change. Really clean on the uptake. Resistance, support at the median line, support at the median line. Well, I guess this is the 25% parallel here. Both touches really clean. Last thrust, here we are at resistance. Look, for gold, this could be actually a pretty big move. Here's gold on the weekly charts. So we talked about 1768 for a while. That was the 618 of the rally off the yearly lows. You had the pitchfork that we've been following off the yearly lows there as well. We did close a week below it, but not below this slope. Here's 2 weeks of trying to close below that. No luck. Here's the rebound. From the daily chart, or excuse me, weekly chart standpoint, the 2021 high week close at 1850 is next big resistance. That's this year's high week close right into the start of the year. That level, my friends, converges on the 52-week moving average, and that continues to highlight the 1850 level as your next major weekly resistance zone in gold. Intraday looks like this, or I should say daily, it looks like this. So if we breach here, again, 1850, what we just talked about, right? Look what's there. The 618 of the drop off this recent high from last month, 1853, a little bit higher. Those former swing lows from May, and then the opening range low for June, 1852. You getting the picture? So if we breach and close a daily above 1815, I mean the 50% retracement somewhere near 1835, but the next major resistance zone is way up here. It's already seen 1, 2, 3, 4, 5, 6. Today's going to be the 7th consecutive advance. Last time we saw that was here. Just a small interruption before resumption. Prior to that, looks like here we got a 9-day consecutive advance. That was actually the high. Oh, nope. Pushed into a new high after that. So it's actually not that radical, right? It's actually not that radical. So don't discount it. Watch today's close. If we buckle and we close below 1814, slight possibility for a pullback, but the broader trade remains constructive on the near term. Here's what it looks like again on the intraday. That's the 4-hour. Here's the 2. Divergence into the median line. Again, highlights the risk for near-term exhaustion, but there's no signal just yet to fade it. And if we do break the median line, like I said, next real major level is into 1850 there. Questions on gold? All right. Who else has been catching the Haven trade as markets seemingly turn over on risk, right? Here's SPX, and we'll go over the levels in a moment, but we've really tanked. It's been the yen. It's been the yen. And dollar yen not only came off of big resistance, we're right back at big support. Can't make this stuff up. Another massively clean technical move here in dollar yen. The big resistance level we talked about was 1160 into 1198. That's the 618 retracement from the decline off the highs we made in 2016. It's going to be the high week close from 2019. It's going to be the high week close from 2020. And it also had the median line. We ran right into that last week. Failure opened this week, plummet into this major pivot zone that we've been tracking for years now. It's the 2019 open at 109.68. 109.92. Weekly, watch this weekly. If we close below this slope, again, you're risking a much larger decline. That said, big surprise, we just went over all those setups. We're at support right now. We're at support right now. It's Thursday. Here's what dollar yen looks like on the daily chart. Very similar scenario. A couple of things I wanted to highlight here. So this is the same pitchfork we've been following. I also had this embedded channel line, 1 touch, 2 touch, broke right through. So no merits on that, but we are again at that pivot 109.67 into 109.92, just below. There's that 25% parallel. Looking for a reaction here. If you're holding short, it's a good zone to reduce exposure, lower your protective stops. A break below here, you got the 52. It's 100-day moving average near 109.11, let's call it, but key support still going to be at that 109.62 region. Last year's open. Here's dollar yen looks like on the intraday. Looks like we broke uptrend support. So here's the 240. This is the same pitchfork we've been following. Okay, same trade. Where was the last dollar yen update? Right here. Same pitchfork. break of the median line right there. It's kind of hairy, but there's the move lower, 110.41, 110.06 was our 38.2, and that converged on slope. Not only did we break there, but we accelerated lower. Here's the 2019 open. Failure ahead of 110.41 should be the name of the game. If this break is legit, advances should be maxed or should be limited by 110.41. Next downside break, this is just an initial target. This is such a big zone for me that if we do break and close below 109.68, these are just really near-term targets, 109.26, and then the yearly open, 108.62. So that's down here. So you can see we're at a major support inflection. We're looking for a reaction here today. Bearish below 110.41. Next key support targets, 109.26 soft target, but really the bigger one is going to be that 108.62 region. Big moves for dollar yen. Big moves for dollar yen. Questions? All right. The abomination catching a nice little risk off flurry here, giving rise to the yen. See if that offers some inflection here. So crude, everyone's been talking about this major turn and what it means for crude prices. The levels have actually been pretty clean. Here's what we looked at back on the 6th. And we highlighted this weekly chart coming off of major, big resistance. You're talking about multi-year highs. You're talking about measured moves, 100% extension off the low. You're talking about the 2012 swing low, 77.26. We turned right ahead of that resistance level. The daily chart looked like this. I mean, outside daily reversal off of multi-year highs. That was a tell of an exhaustion trade. And so the interesting thing was this near-term embedded channel had us looking for a break for a move onto the median line just below the 72 handle. So we've gotten all of that. Here's what oil looks like. Well, let me show you the weekly chart first. Here it is, right? So the region that we talked about was right here, 74 into 75 essentially. Big zone. We never closed a weekly close above it. So that was a tell, okay? Intraday, we still didn't make it all the way up there, but we failed right ahead of that major key resistance zone. So these arrows that you see here, guys, on the chart are just the last, I just eyed these out, the last couple of outside daily reversals that we've gotten. So we got one here, we got one here, here. Some of them didn't produce much, like this one wasn't really much of a draw. This one was an abject failure. We rallied the next day. But we did put out an outside weekly reversal, or we're attempting to put in an outside weekly reversal this week. It's a little different because it's coming off of major resistance. Major resistance. Okay, so yeah, I'm thinking you get a bit of an interruption here in the crude trade. Still broadly constructive, and I was talking to a reporter, guys. They might put it in the Wall Street Journal or something. I don't know. But we were talking to a reporter yesterday, and he was asking me, and I was telling him, look, you know, people are freaking out because we're down 4%. Even if crude drops another 10%, another 13, 14%, it's still within the confines of the broader uptrend. All we're doing is failing this a raised ceiling right ahead of uptrend resistance. An exhaustion trade? Sure. Trend reversal? Not yet. Not yet. I broadly still think this thing is constructive, but we are exhausting near uptrend resistance. So the risk for a near-term correction on the back of this rally, sure. If we close below the median line, close below 60 on weekly momentum, that's your signal. That's a near-term exhaustion trade. Here's what it looks like on the daily charts. Not only are we poised to mark an outside weekly reversal, we also marked an outside daily reversal off that high. Again, just pips from the 1737 resistance zone. Nice momentum, breaking back on that same day, right back below 60. And that was the day that we wrote that update to look for a larger turn in crude prices. Now, we didn't have the bounce here to get this 100, which I'll show you in a moment, but we were looking for the median line, right? That's where we are right now. Okay, here's what it looked like back then. We're right here. We had posted that outside daily reversal. A couple days later, we're right here. So for the intraday, here's what it looks like. I do think you could get a little bit of a bounce here. Again, near-term resistance, bearish invalidation, 74.91. Okay, that's also now your weekly open is just a hair above that. That's going to be my bearish invalidation. Near term, 1, 2, 3 does give you two equal legs here, and we're looking at support near 70.80. We're seeing a little bounce here. At the end of the day, again, anything on a retract here should fail ahead of this zone. Next downside target, 69.24, 67.42. I'd be looking more for a reaction if we get down to this region. I don't necessarily see 66 on the cards on this drop, but certainly I'd be looking for some sort of reaction on the 618, just at the near-term advance off the May low there, near 69.25. But interesting. And guys, again, we're seeing the extremes in sentiment also starting to manifest itself. Another question that the reporter was asking me yesterday, and this is anecdotal, but they're asking me about housing and, how does a trader standpoint react with the housing market that we're seeing? And again, anecdotally, I've seen this myself. My wife is pregnant with our second one on the way. We're looking for a house, and yeah, over the last 8 months, prices have been on fire. But we're starting to see that cool. Why? Does that tell us that the market's necessarily turning? No. My argument is that it is an extreme. The sentiment is starting to become a little, I don't want to say irrational exuberance. For any of you who are economics majors, that's sort of the peak, right? In a bull market when people are just super bullish. But I do think we've reached a terminal point, at least on the upside, for housing prices, right? The supply is still there. Mortgage rates, if you've been looking at the 10-year, mortgage rates are even lower. So the availability of cheap money is still there. So why are prices plateauing? Well, that rush, that huge sentiment extreme is starting to dwindle, right? So anyway, I digress. But the point being, same thing with oil, right? As this thing was ripping into 76, you start seeing people getting, oh my goodness, this is the time to get long oil. This is going to go to 80, 90 bucks a barrel. And that's when the market actually takes a break. So you're seeing that also in Bitcoin. You're seeing that. We'll go over all these trades, but so be careful. It is the time and the market where we are heading into that summer doldrums, and these are when the sentiment gets caught off foot, right? So use some caution here. Crude oil at support 70.83, bearish below 74.92 near term. The 10-year, I just wanted to touch on this because this has been making a lot of market headlines. And for you guys, you've been seeing this same exact chart for the last 6 weeks. And so for us, I hope none of you have been surprised by this. 141.46, excuse me, was a level that we were talking about for quite some time. It's the 100% extension from the high. We tried to test that here last month when we tried to break below it. Massive daily reversal higher. So it's only befitting that if we do break in a daily close below, we should continue to favor the downside bias, looking for our next two targets. The first one's already been hit. That's 27.56 into 28.94. I told you about that on Monday and Tuesday. Not Monday, Tuesday. And the second target's the 1618 of the same measured move. So just like this is the 100, the 1618 of that extension is right down here, just a little bit lower, 123.50. So here's what it looked like as we were breaking. Again, I highlighted this right on the 6th as the day was materializing. It was a red flag because that was such a huge region for me. Not only did we break that day, we ended up closing that day below that confluence zone. So yes, we are at support near term. Resistance right back at 41.46. Bearish invalidation right into 146.70 is going to be that gap. So another question. I'm just telling you all this anecdotal stuff, guys, just to tell you, again, to lean on how much extreme sentiment is. Another one where the reporter asked me, what do you see in this move in yields? What does that tell us? Is this giving us some sort of indication? And yes, it could be, again, it's that red flag out there, guys. Smart money is diving into the perceived relative safety, quote unquote, of US treasuries. And it's lagging, right? Smart money starts to move. Here's the SPX a day later, now starting to turn over. So look for a reaction here today. We saw a pretty precipitous drop. Wouldn't be surprised if we do see some recovery. Again, this is basic trendline support off of last year's low as well from August. So 1 touch, 2 touch, 3 touch. We're there now. Major pivot in price, former swing highs. Look for a reaction here today. Questions on US Treasuries? Number 9, 10. Here's dollar CAD. Canada employment data on tap tomorrow. Here's what it looks like. First on the weekly chart, guys, we are coming into another pivotal resistance zone. Now we do confirm, or at least this move does suggest, the break of the downtrend we've been following from last October. Okay, so this does kind of, we looked a couple of weeks ago when we broke back below. I was telling you guys, I don't know what to make of this. You know, even if we just remove this line altogether, here's the slope we've been following. This is, what is that? Pull back. Looks like we broke it again. Next major resistance zone. You're looking at a basic 236, the entire drop off the highs that you made last year. You're looking at the 2018 objective yearly open, major pivot in price. That's 25.80 into 26.34. Weekly chart. Weekly chart. So keep your eyes on this on a weekly close basis. Here's dollar CAD on the daily. Here's my concern. I told you guys last night, the last level I was holding along, the last level I was looking for was 25.50, and I wanted to see a reaction there. Well, we got a reaction. It actually accelerated even faster, but here we are. Looks like we're failing, or it looks like exhaustion, possible exhaustion, right ahead of the uptrend resistance. So the formation still holds in a stellar fashion, but again, puts a little red alarm, right? Red alert. We're still at uptrend resistance, so I do like it higher. I do think we've broken multi-month resistance, but we're still checking uptrend resistance. What do you do here? If you're holding a decent long position, I'm out, by the way, so my limit hit, you know, I wasn't here. It hit at 25.50. I wish I was still holding a little bit of it, but that was only 25% left of the position from yesterday, so I'm looking to re-enter. Okay, I'm looking to see if we get a reset on this. If we get a pump fake again tomorrow, it might be an opportunity for a quick fade. But you know, I'm broadly still constructive on dollar CAD. I just think we're at slope resistance right here. So again, a moment of caution. Here's what it looks like on the intraday chart. Okay, and here's what it looked like on our most recent update from last night. So as I told you guys, I already bailed on 75% of position. I was holding 25%, looking for that last stretch into 25.47, 25.49. Here's what happened. We got into that region, and then I'll bring up the 2-hour chart for consistency here, but then it accelerated. We haven't quite made it to the April high close yet, but that's your next level, 26.03. Just higher is that upslope. So there's nothing here for you on the long side if you're not already long. If you're looking for new positioning, like I said, I actually might be interested in a fade opportunity if we do get a pump fake into that resistance for a pullover. You're gonna be half leverage, you know, obviously counter trend trades, we wanna be much more nimble, but certainly it's been a pretty clean setup, guys. Look at this formation. It's the same one we've been following. No change. No change to any of those levels on dollar CAD. Remember, employment figures on tap tomorrow. So we're expecting to see a forecast of 195,000 jobs added for the Canadian economy. Unemployment is expected to drop to 7.7% from 8.2. So might be the catalyst. Again, remember, we're trading the deviation from the expectation, not necessarily the print. But it might be the catalyst if we do get a decent read tomorrow for some CAD strength to give us, propagate that pullback. We'd be looking for a reaction at the median line, bullish invalidation right back here at 24.23. So that is dollar CAD. Again, I kind of wish I had left that limit open, but we'll reassess this if we get a pump fake into resistance. Last but not least, on the FX side is Aussie yen. You know, I haven't jumped back into this. If you guys recall, last week I told you about the positioning I was in here. That limited out, and then we were looking for possible reentry into the start of this week, especially as we were breaking that downtrend on that fake early into the open. We didn't quite get into resistance. We closed that day right back below. This was like the same exact setup, guys, on Kiwi, right? Kiwi broke that downtrend, failed, and then closed right back below. We got the same exact deal here in Aussie yen. So before I show you that, let me just show you again where we are on Aussie yen for the broader picture. Here's what it looks like on the weekly charts. And here's our last update that I gave you guys last night. So I was warning, and my concern was to look for a reaction here because we were right above that slope. You see this weekly chart? Large pitchfork, 75% parallel right there. There's the break. There's the break today. 80, 90, 79, 60, 79, 80. Your next major levels of support on the weekly chart. The weekly chart. Here's what it looked like on the daily yesterday, right? Huge reversal, failure to break that downtrend. We closed well below it, kept the focus on that 1618, kept the focus on the 618 retracement. That's basically looking for a drop in your 8150s. Here's what it looked like on the intraday chart. Again, we noticed that false break, looking for weakness below the weekly open, downside targets. Again, here's the daily chart now. Okay, just a side-by-side comparison there. Break, boom, boom, ahead of schedule. Ahead of schedule. And again, the intraday, no change to any of those levels. So while this was our last sort of target that we noted on the intraday report right here at 618 retracement, the slope for the downtrend, because this is ahead of schedule, comes in just a little bit lower. So if you are holding shorts on this, guys, like 81 starts to become where the slope starts to come problematic. On a daily close basis, though, I do want to see where we close in relative to this 8150 618 retracement. Close below, mutter lower, 8071 is your next level. If we close above, 8224 should be resistance if we're going to hold this slope. So look for a reaction here today. Now probing initial support targets on Aussie yen at 8150. Another one that tends to be very, what's the word, sensitive, right, to risk sentiment. Aussie yen is your quintessential, right? So a turn lower here is kind of jiving with what we're seeing in the SPX. Here's SPX, guys. So another one where I just wanted to highlight what the last couple of outside day reversals looked like. And for SPX, it's been relatively telling. I think I ran analysis on this a couple of weeks ago. Average decline or average regression after outside day reversal was like 4.2% or something over the last 6 scenarios. Since then, okay, we got an outside day reversal lower here. Wasn't off the high, so it wasn't as strong a signal as this, or this, or this, but it was followed by another outside day reversal to the upside. So contradicting signals, bearish followed by bullish. Obviously the bullish one took over. And then we posted another outside day reversal 2 days ago here. Yesterday was a wash, closed at the high. Here we are, another reversal lower. We're now testing the monthly open, 4,300, the 1618 extension with the advance off the yearly low or the May low there. Slope. All of these slopes derived off of this. Slope support, turned right ahead of it. Same slope, resistance, resistance, resistance. Here's the turn lower. On the intraday chart, looks a little different. Looks too clean for comfort. Here's what it looks like on the 240 minute. You can't make this stuff up, guys. This is the same exact slope we've been following with the addition of a 138.2 extension on the upside. That's all we did, is just add a 138.2. Boom, resistance, resistance, divergence. Here's a turn lower, looking for key support into 42.80. Don't have a formation for the decline, don't have a gradient for the decline. I don't know that it's a full-on reversal, but certainly the risk for exhaustion remains well below this slope. Key support 42.80. Now, if you haven't heard enough, we're at key support, enough at key resistance in this webinar. There's more to come because here's Bitcoin, and I think this one's going to be pretty big, testing critical support. The level is 32,000, not on account of it just being a big figure, but 32,005 actually ends up being the yearly low day close from January. It's still the low day close, guys. We still have never broken that low on an intraday basis. That's your low day close. We're at support. The same three levels on the downside, guys. And this is the same exact setup I published like months ago, ever since the initial break back here in May. We've been ranging. Last 2 weeks, we've been talking about still risk while below 36.47, 37.27. We failed there twice. Support targets, big area of interest for me if reached for possible low, possible exhaustion area to start, which maybe if you're a longer term swing trader, start to look for possible entries. Start scooping this thing up. But don't get faked out. There's gonna be a lot more sideways action here. I still think the risk is for a larger washout before we turn that levels right down to 27,000 into 27.7 basically. Near-term resistance 37,279. So still expecting stuff from Bitcoin over the next couple of days. And we covered oil. So guys, that's everything on my list. Do let me know if you guys have any questions or trade setups that you want to review. There's been a lot of things on the move. We're just opening the first full week of the third quarter. Keep things light. I do think, again, a lot of these inflection points that we're looking at will start to materialize. And specifically, if we get some breaks of the monthly opening ranges, guys, heading into the end of the week, I think we'll get some more definitive price action. But be careful with this divergence with euro strength, sterling weakness, right? CAD weakness, but that's coming near resistance. Aussie weakness, that's near support. Kiwi weakness, that's near support. Dollar yen weakness, that's near support. So we have a lot to look at to the close of the month, into the close of the week rather. One other thing I just didn't want to touch, I haven't been giving you guys updates on Swissy because I don't like the broader setup, but I do want to note this does look like a 1, 2, 3, 4, 5 wave. So all things held constant, you'd want to treat this as a 1, 2, 3 wave correction. Now, we've already cleared 100%. It's not corrective. So this is one of the ones where I'm going to be looking as sort of a tell for both euro and obviously for Swiss franc. Really nice, really clear wave count, suggestive that we should be in a correctionary form here before the continuation higher. So just a note there on some of ancillary dollar crosses, but hopefully we continue to see the VIX surge higher. You know, we've been hearing people talk about how low the VIX has been forever. And as I've always said to you guys, the longer it stays here, the more radical the break and the more significant the surge in volatility. I think we're seeing that now. Don't get caught up. Don't get married to any trends. Stay nimble and play these levels, guys. We're at some really nice inflection points. The market has continued to offer really nice moves if you know where to look. If you know where to look. All right. Doesn't seem like there are any more questions on your end. I guess you guys are following the summer doldrums as well. Aurelian, Jay, Pete, Ted, everyone in the room. If there are no other questions, we'll go ahead and wrap it up there. Stay nimble. Like I said, into the close of the week, things look very interesting. Best of luck trading. Many thanks to you too, Jay. Have a great weekend. I'll see you guys on Monday back for the free session on Daily FX and right back here on Tuesday and Thursday. Have a great weekend, guys. See you then. Cheers.